Network 18 that stock has rallied over 12% in trade post its Q1 FY26 numbers. Margins have improved for the company while viewership share has risen too in the quarter. Our colleague Prashant spoke to the company's managing director Rahul Joshi and began by asking him on the company's revenues and margins and also on the overall environment going forward for the business. Listen in.
If you look at the last 2 quarters, they have been incredibly tough for the media industry. The operating business environment has been soft. Clients are not spending as they used to. That earnings have been under pressure. I don't need to tell you all of that. In this environment, we have managed to post a 5% dip in revenues. That has to be seen in the context that in the first quarter of last year, it was an exceptional quarter because of election results. It was a bumper quarter for us. So if you were to compare it from the quarter before that, we have grown a healthy 9%. But from last year, it is a dip of 5%. But at the same time, we have kept a tight, very sharp eye on costs. We've been able to control costs considerably. So that is what has reflected in this somewhat improved margins. So I'm very happy with the operating team's performance this quarter. I think it was a tough quarter in which they really came out tops.
Rahul, just one number out of the way, and then we can get into specific segments, etc. You've recorded exceptional gains from an investment revaluation in this quarter. Outside of such one-offs, can you tell us when do you see the total business returning to consistent profitability? I mean, what's the timeline like?
No, so that number that you see there is because of assignment of voting rights to Inadu in light of the CCI dictated sort of order at the time of the merger of Viacom18 and Star and Disney and Viacom18. So we had to mark it to fair value and not at cost. So which is why you see that bump up in that number. So that explains that part. I think that in this first quarter we are EBITDA positive. If you look at the next 3 quarters, I'm hoping that the overall outlook will improve as we head towards the festive season. I am hopeful that since our channels and our digital properties are all in commanding leadership positions, we will be able to not only drive revenue, but we will keep costs under control in our existing businesses. Costs are mildly likely to go up only in our new investments, maybe in areas like First Post or in money control. So overall, I am hopeful that the next 3 quarters would be better. We are seeing some green shoots, but early days, I would say. I think we'll have to keep an eye on the earnings next quarter. So things are looking up, but I wouldn't rejoice at the moment.
I mean, the festive season is going to be upon us. Is that typically that is a bit of a that gives a bump up, a tailwind, right, to advertising revenues?
No, yes, of course it does, because clients are waiting for the sentiments to improve, for the festive mood to kick in, and that is when they also open their purse strings. So I remain hopeful that July is looking slightly better. I wouldn't be very excited yet, but I think as we hit the festive season, I think we will see some impact on higher revenues. And you have to see it in the perspective that we are the #1 media company broadcaster. News broadcaster and digital media company. We have a commanding position in the market. All our channels are #1 by a wide margin. We've only increased the gap with our #2 player, whether it is our news channels or it is our digital property. So much so that News 18, for instance, has beaten the Times of India, in the recent ComScore numbers. So that gives us a lot of reason to cheer, and that gives us also a lot of hope for the future.
Advertising, of course, is outside of one's control, but you've at Network 18 driven and focused on subscription revenues in a big way through platforms. I mean, reach is 300 million. Money Control Pro has done quite well, but that question still comes up. Can subscription revenues really scale in a big way in a price-sensitive market like India? And you're doing this across properties now. Could you give us a sense of what's happening in each of these properties?
No, that's a good question, and I'm glad you asked this. 4 years ago, when we were embarking on our subscription drive with Money Control Pro, there were a lot of people who told me that you will not even get 10-20,000 subscribers. It would be a huge success if you manage to get that number. So we started with $9.99 per annum, And very quickly, we notched up a number of 1 million in 4 years. 4 years, we hit the 1 million mark. Now, that is quite remarkable. We were so enthused by the success of this that we have now launched something called Money Control Super Pro, priced at 2,500 rupees per annum. It's just 2 months that we have launched it, and the numbers are really heartening. So this gives me reason to believe that the naysayers were entirely wrong. There is a market for where people are willing to pay. If there is high-quality content, if there are tools that will enable traders and retail investors to, in their investment journey, there is every reason that they will pay. So on CNBC also, we have started something called CNBC Access, 10,000 rupees per annum. So we're getting more and more ambitious. And 10,000 rupees, it is not like Super Pro or Pro, which is only giving stock advice or tools, but it provides, it sells the entire CNBC experience. So you'll be invited to all the events, you get to interact with the anchors, you get to visit our studios, you get value-added shows, you get exclusive interviews only behind the paywall on CNBC Access. So we are hopeful that we'll be able to crack this 10,000 rupee price point as well. So as you see, our price points are only going up. People are continuing to pay. The question is, if you are India long and you take a punt on the economy over the next 10 years, it remains the fastest growing economy in the world. I have every reason to believe that subscription is the only way forward. The people who latch on to this early on will be able to reap the benefits in time to come.
Absolutely. I mean, media is one of the top consumption sectors and is a play on consumption. So for these two, Money Control Super Pro, CNBC-TV18 Access, if you can give us an early sense of how these, it's very early, but I mean, are they doing as well as you thought? And can they become sizable revenue streams going forward? How long will it take, the journey take, in your opinion?
So, just to give you, I can't speak numbers and I don't want to get into granular details, but let me give you a perspective. Money Control till about 4 years ago was absolutely and only driven by one revenue source, which was advertising. Today, we are doing subscription through Money Control Pro and now more recently Super Pro. We also launched lending on our platform. We do unsecured lending on our platform. No default risk on our balance sheet. We have onboarded partners, lending partners, and we get some commission from that. We've started that also as a new revenue stream last year. We've done almost a year of that. Very enthused about the performance and how we have done in the lending business. So as you see, we are moving away from content, advertising to subscription to even lending. And if I were to give you an idea, maybe last year from 100% advertising, we did about 70% advertising and 30% non-advertising revenue. Right? I am reasonably sure that over the next few years, this will substantially change in favor of revenues and in favor of subscription revenue and other forms of revenue. That is the only way we'll be able to grow our business. We have to keep growing advertising. This does not mean that if advertising becomes 50% in the next 2 years, that's not growing. That's growing as well. But the overall pie is growing even faster.
Absolutely. Can you give us a split between advertising and subscription as things stand right now? And where would you like this ideally to be, that number, that split?
So I gave you the example of Money Control. I'm not giving you the, because subscription also means television subscription. We get a sizable number from the television subscription revenue as well. That continues to be, subscribers are falling off, all cable and DTH operators. They're reporting lesser numbers. But for us, our revenues are very stable over the last few years because we are a large group. We have large number of television channels. So it's a big bouquet. So that continues to give us the benefit. I don't want to say anything on the numbers at the moment and what is my prediction over the next few years. But I was giving you the Money Control example to tell you where things are moving and how we as a group are prepared to exploit this.
Is there a broader, and this is a question we ask to most CEOs nowadays, Rahul, with these very fast developments in AI and AI being used to increase productivity at pretty much everything that one does in the workplace, how is that, does that kind of sort of go into how you think about workforce requirements? I mean, in the news business, I mean, people are the biggest expense in that sense. How do you think about this?
Our biggest expenses are, talent cost, people, distribution, because we have to, invest behind distribution and reach, and also tech. These are the three large cost pillars for us. Now, if you look at our existing businesses, they are mature businesses. Costs are not really going up there. In fact, we are being able to achieve cost efficiencies there. AI is helping in a big way. We have recently nominated an editor who's our AI head. One of the few companies in India to do that. We have a CTO who only focuses on AI initiatives. So we are adopting AI as a very critical, element in our work process and making it more and more efficient. So going forward, we will not hire talent in areas where we can use AI to get better efficiencies. We will hire talent, which will add impact to our business. So that is the way to look at the entire business. I think AI is helping in a big way. Across the group, a lot of AI initiatives, not only to look at efficiencies, but also to look at driving traffic, engagement, and many other ideas. So that's how we look at AI.
And a standard disclaimer on your screens, Network 18, a company that operates CNBC-TV18, is controlled by the Independent Media Trust, of which Reliance Industries is the sole beneficiary.